It appears. So the next release of this news, it will be on the 1st of May, 2024. And then the notes, ne? No, why do traders care? This is the other important aspect. Why do you trade? Why do you care? But if you can see from the image that I just showed you here, what happened at 8 o'clock and what is happening now, it is important for us to care because it moves the market. We see that. We do care because it moves the market. Simple is that. That is why we care. And then we look at these other factors, ne? And then what we have here is it's among the primary methods, ne, that the Fed use to communicate with investors. Remember, as a trader, you are an investor, ne? To communicate with investors regarding monetary policy. Ne? It covers in detail the factors that affected the most recent interest rate and other policy decisions, along with commentary about economic conditions such as the future growth, outlook, inflation. Most importantly, it provides clues regarding the future monetary policy. Monetary policy, these are the interest rate decisions and other decisions that we use to we have some messages in the chat room that we use to make a trading decision. So I want us to go live on this news just for us to feel or to have an idea of what a news event is. Some news events, they come as economic data only. Some, they come as a speech. Like now, where can you watch this speech? So you don't have to, you can simply come on the source, ne? Here on the source, ne? You can go on the source to make follow-ups on the on that event if you want. In most cases, we will find links and see here, Federal Reserve live. Can you see? There's a shortcut for this video. And if we open this video, you realize that there are some kind of like economic information that they are talking about. Let's just open that and see. You just click on that through the source.
You know, we do see the risks as two-sided, so it is consequential. We want to be careful. Fortunately, with the economy growing, with the labor market strong, and with inflation coming down, we can approach that question carefully and let the data speak on that. That's really what I was thinking.
How much of that inflation we've seen so far this year do you chalk up to one-off calendar adjustment effects following a period of high inflation versus some change in the trend we saw in the second half of last year?
I want to start by saying I always try to be careful about dismissing data that we don't like. So you need to check yourself on that, and I'll do that. But I would say the January number, which was very high, the January CPI and PCE numbers were quite high. There's reason to think that they're.
Okay, the point I'm trying to make is what we are watching now. It's a live streaming session. So I want you to pay attention and understand the language that they are using. You realize that the language that is being used, it's kind of an economic language, and it's important to us as traders. They are talking about CPI, they are talking about the other things, okay? Let me continue to share the screen.
Closer to that point, but you know, we didn't. Last thing I'll say is we didn't excessively celebrate the good inflation readings we got in the last 7 months of last year. We didn't take too much signal out of that. What you heard us saying was that we needed to see more. That we wanted to be careful about that decision. And we're not going to overreact as well to these 2 months of data, nor are we going to ignore them.
Hey.
Hi, yes, Chair Powell. Could you speak a little bit more about the timing? Is there enough data between now and, say, May to be able to get the kind of confidence that you say that, you still need, or by June, is there enough data for you? Just give us a sense of there. Thank you.
Yeah, so we make decisions meeting by meeting, and we didn't make decisions about future meetings today. Those are going to depend on our ongoing assessment of the incoming data, the evolving outlook, the balance of risk. So I really don't have anything for you on any meeting looking forward.
Just a question, is there anything about there for you to be able to?
We'll take, things can happen during an intermeeting period. If you look back, unexpected things. So I wouldn't want to dismiss anything. So I just would say that the committee wants to see more data that gives us higher confidence that inflation is moving down sustainably toward 2%. I also mentioned, and we don't see this in the data right now, but if there were a significant weakening in the data, particularly in the labor market, that could also be a reason for us to begin the process of reducing rates. Again, there's nothing in the data pointing at that, but those are the things that we'll be looking at coming meetings, and without trying to refer to any specific meeting.
For those that recently joined, you might be wondering, why am I showing you this? I am showing you this to understand. Ne? Let me exit.
The teacher, thank you.
This thing that we are watching, I want you to understand that this exact same thing that we are watching is what is moving the market as we speak. This is what moved the market from here to there. That is how important that video that I'm showing you is. Are we following?
Yes, you are following.
Yeah, so the point I'm trying to show you is, see the whole day, the market did not move, ne? But from 8 o'clock when those guys started with their meeting, the market is moving. I want you to see it live, the importance of fundamental, the importance of news events. We're gonna dive deeper into how to interpret this kind of speech and how to follow this news. But what I want you is to experience the live session on how the market is moving as we speak. Can you see how the market is moving as we speak? Yeah? While the event is live. So that live event that I'm showing you is what's moving the market. Remember, as traders, we trade based on technical and fundamental and sentiment. And then as a trader, you don't want to be caught by surprise. Maybe you sold, and then you happen to be wondering what is happening in the market. So these are the kind of things. So let's just watch it one more time, then we'll continue with our normal session. Okay. Where did we find it? Yeah.
You're now in this year. So I think that sorry, say your last part of your question again. I think if you look at the SEP, what it says is that it is still likely in most people's view that we will achieve that confidence and that there will be rate cuts. But that's really going to depend on the incoming data. It is. The other thing is, in the second half of the year, you have some pretty low readings, so it might be harder to make progress as you move that 12-month window forward. Nonetheless, we're looking for data that confirm the kind of low readings that we had last year, and give us a higher degree of confidence that what we saw was really inflation moving sustainably down to 2%, toward 2%.
Gina Smiley, the New York Times, thank you for taking our questions. A prior comment, Han, that a weakening in the labor market would be a reason to potentially cut rates, or at least a consideration in making a rate cut. Would continued strength in the labor market be a reason to hold off on rate cuts? And just in general, if labor supply continued to rebound in 2024, the way it did in 2023, what would stronger hiring and possibly stronger growth mean for the path forward on policy?
Yeah, so if what we're getting is a lot of supply and a lot of demand, and that supply is actually feeding demand because workers are getting paid and they're spending, and that's, you know, what you would have is potentially kind of what you had last year, which is a bigger economy where inflationary pressures are not increasing. In fact, they were decreasing. So you can't have that if you have the continued supply side activity that we had last year with both with supply chains and also with growth in the size of the labor force.
But so strong hiring in and of itself would not be a reason to hold off on rate cuts.
No, not all by itself. No, I mean, we saw it, you saw it last year, very strong hiring and inflation coming down quickly. We now have a better sense that a big part of that was supply side healing, particularly with growth in the labor force. So in and of itself, strong job growth is not a reason, you know, for us to be concerned about inflation.
Neil.
Hi, Chair Powell, Neil Irwin with Axios. How do you assess the state of financial conditions right now? And in particular, do you view the kind of easing in financial conditions since the fall as consistent and compatible with what you're trying to achieve on the inflation mandate?
So we think there are many different financial conditions indicators, and you can kind of, you know, see different answers to that question. But ultimately, we do think that financial conditions are weighing on economic activity, and we think you see that in a great place to see it is in the labor market, where you've seen demand cooling off a little bit from the extremely high levels. And there I would point to job openings, quits, surveys, the hiring rate, things like that are really demand. There are also supply side things happening, but I think those are demand side things happening.
We come back. People are making decisions from that speech. That is what we're going to learn in the fundamental analysis. If I'm to show you back to the chart, as we are watching the, let's pause it. As we are watching the session, see the move on the chart. So even on the 1 hour, wow. So if we see here, let's try to make it a bit big. Okay. So what happened is the market moved. Trying to pinpoint something. So what happened is the market moved, it didn't move much within this hour. This one, it didn't move much. And then the next hour, it did not. The next hour, it did not. This one, it did not. It didn't. But can you see what happened at 8 o'clock? Within 1 hour, the move that the market made just because of that speech that we are watching. Can you see? This is about how many pips? Let me check. Just a moment. It's about 52 pips, just within an hour. Okay, long story short, when the market is still spiking, market is still pushing. The market is still pushing. Okay. Okay. Long story short, I just wanted to catch your attention on why we should pay attention to fundamental analysis and the impact that it brings on the market. My screen is just black. I can only hear you. Is it the same with everyone? Can you all see my? Can you see my screen?
Yes.
Yes, we can see.
Yeah. I wanted to catch your attention on how important is the news event, and this one came at the right time for you to see it live on how the market is responding to the news events. Okay. Long story short, Forex fundamental or news event, it's just a method on how we evaluate the value of a currency by examining or analyzing various economic events like this one that is happening, the speech that they are giving. That speech is being given by the Federal Reserve. The Federal Reserve is our Federal Reserve is Bank of Namibia. It's our reserve bank. If our governor, Johannes Gawasep, something like that, gives a speech about repo rate, you know how our country shakes when repo rates are being announced in our country. So that is our governor that gives that report. The same what is happening now, the governor of the USA in their reserve bank is giving a report on the interest rate decision and is giving a speech. You see how powerful the reserve bank governor is. That is what is happening currently. So this, we just evaluate the speech that the governor are saying of the reserve banks, because with their speech or what they are telling us, we can be able to predict the economy situation, the health of the economy of that country. For example, Jerome Powell, the guy that we are watching, he's the governor for the Federal Reserve. When he is speaking, what he is telling us, what he is saying in those speeches in the Q&A sessions can give us an idea on how the economy of the USA is doing and where is it heading? What are they planning to do? Economic activities that they are planning to implement in the US. We can get those informations from him. That's how powerful it is. So if he gives informations that are hawkish means positive information. Let's say if he promised, no, they are working on implementing new jobs or creating new jobs or new economic activities that will bring jobs in the country, then that one it's a positive news for the country. We will start buying as trader. That is what is happening. Other traders, not us that are on Zoom, other traders and banks, they are watching this speech live. That's why if you have seen, I have a trading station. Some of you probably wonder, why do I have multiple screens as a trader? We use those screens to watch these news events. On the other screen, you are watching live. If you are trading news, you are watching live. And then on the other screen, you are placing your trades based on the interpretation that you are making. So we use this to examine economic, financial, and geopolitical factors that can influence the exchange rate. This analysis usually involves studying indicators such as the interest rate. As we speak, the news that we are discussing now, it's about interest rate. Where is our economic calendar? If we minimize, the whole story started from the federal funds rate. This is just based on interest rates. Interest rates, and then inflation. We're gonna go through this point by point with time. Economic growth, political stability, and trade balances to make informed decisions about the future direction of a currency pair. You get it? So traders, we use this fundamental analysis to understand the underlying forces driving the Forex market and to make more accurate prediction about currency movement. We recently learned technical analysis, the chart patterns. So it will be an advantage if we know that based on the economic factors, the US dollar looks to be in good hands. We'll be looking for buy. So if the technical also says it's a buy, why can't we buy? Obviously, it's something that is good for the currency. Okay, that is what I wanted to introduce you and catch your attention on fundamental. We will take a couple of days on fundamental. We're not gonna rush it. After fundamental, we'll only have a few things that will be left with. That is the psychological part as well as the money management. Then we'll move to practical. The rest, it's just up to you to put things together, and the practical will do a lot with that as well. Okay. We now continue with what we were supposed to cover yesterday. The next thing I wanted to show you, if you can remember, it's this, I promised to show you the Fibonacci tool. Okay, what we do is, and then this, which one should I start first? Okay, let me start with this one. Yesterday we bought Euro USD. As we speak, we are in profit. I'm not sure if we bought it with the students or with my team at the office. Okay, but we did this yesterday. We had a chart pattern right here. However you want to draw it on Euro USD, you might. Okay, and then we have another. That is the bottom trend line, and then we have the top trend line. So far, I think we have reached one-to-one risk reward. Something's not right here. Just a moment. Let me switch back to the one that we're using. Okay, here. This is what happened yesterday. Okay. If you remember the chart patterns, the market, just a moment again. I want you to have a clear view. Okay. Let's zoom it in a bit. Okay. Just there. Okay. What's happening is the market was going up, down, and then here it went up. So if you see here, what is happening is it's forming this falling wedge, the falling wedge pattern, where we could connect these two or these dots, and then we could also connect these to form this shape. Hope you remember we covered this shape. I remember last time that from my experience, it's more profitable if we are to buy at the bottom of this shape. That is what we did in the practical sessions. We met, we did our analysis, and we analyzed that if we are to buy here after the green candle, that is where we bought. Can you see where the middle line is? The one separating the red and the blue. We bought immediately after a red candle. We did candlesticks. When the price reached at this bottom trend line, what we did is we waited for an hour or for 2 hours for the price to give us a green candle. This is how we are applying the combination of the candlesticks and the candles. The combination of the trend line and the candle. After the green candle, we then took a buy entry. So at where this candle closed, that is where we bought. At this point, that is where we bought. And usually, people will set stop losses here, which is a trap. I will not advise setting stop loss here. Market makers, they know that our stop losses are going to be here. So what we do is we give it a room. I'm going to show you in the practical on how we do the calculations of the room. We bring our stop loss all the way down here. All the way down here. This tool that I'm trying to show you, this one that I use to do this, it's only available on TradingView on this website that I'm using to analyze. It can help you calculate your stop loss and your risk to reward. That's why I'm showing you this tool. It's on TradingView. You simply just come here, down here. This one is for a buying position, and then this one is for a selling position. So what you do is, I'll clear this chart. Let me also clear this Let me delete this tool. Remove, ne? Let me also delete this. Let me delete this, ne? Let's say we are here. What you do is you just click on the tool for a buying position. Then you click on where you want to buy. In that case, we click there. I'll show you a live session on how to apply the tool. And then it calculates for you the pips, the risk to reward, and what else? The target. So, and then when you drag this tool, usually we'll set, I made it blah, okay. Usually we'll set our stop loss right below here, ne? And then if you see that there is a number on this tool that we should pay attention to. This number is an 18. This number is telling us that from the level where you entered, ne, to the level of the stop loss, it's giving us a total of 18 pips. So if you are struggling to calculate pips, this tool can help you calculate your pips. Ne? It's 18 pips or 18 points. Ne? And then if you want to adjust your, if you set your stop loss here, and then maybe if you have to set your take profit at this level, let's say here, if you are to set our take profit here, what you do, this tool can easily tell you your risk to reward. So you just have to pull the tool to the level where you are setting your take profit, let's say until here. So meaning this tool will tell us there is a number that is there, that is 84.6. Meaning from the level that we entered up to this level, it's up to this level, it's going to give us 84 pips. Ne? And then with that 84 pips, based on our risk and our reward, that is our take profit, that would be a risk to reward of 1 to 4. Meaning, if you risk a $10 here, you are going to make about a 47 Namibian dollar. Let's just stick to dollar. Ne? About $47. So what this tool is telling us that it can simplify your life. Ne? Telling you if you have to risk a 10 here with this stop loss in this area, and you set your target here or your take profit there, the risk to reward, it's a 4 to 7. It's a 1 to 4.7. Meaning, if you risk a 10, you're gonna make a 47 dollar. And then if you have to push your stop loss down here, if you have to push the stop loss here like we did, ne? If you bring your stop loss maybe up to this level, ne? Your risk to reward would be, let's say, up to there. It will be 1 to 2. So your risk to reward ratio, it's a 2.04, meaning your risk to reward, it's a 2.04. If you risk a $10 here, by the time the market will reach at that level where you are saying it will reach, you are going to make a $20 because we have adjusted our stop loss. So this is the importance of this tool that I will advise you to do some extra learning on mastering how MT5 works, on how trading view, because we are trying to rush to squeeze everything within a month so that by early next month, we start with our practical. But you can see it's a broader course, and there are a lot of things that you need to consider. And then if we are to look at the other instruments, that is, I'll exit the full screen mode, then we'll pull the market watch. That is how you pull the market watch on this website. You just click on the button in the upper right corner. We go through the analysis, for example, like now, we should be in some good profit. Let me check my running trades because we took these trades. Yeah, we are in some deep profits. Okay. This is what we use the tool for. Can you see? What we use the tool for is we sold here. This is the level where we sold. That is our stop loss. This is our target. So this tool can tell us all those things. I want to look for a fresh entry. on how we apply the tool. This one is still pushing, like you can see. This one is back to entry. I think we can take this with my, I think we already took this with the practical team. 0.84, ne? Okay. So what we can do with this tool, if we are to take this entry, for those that have real accounts, or if you know how to trade, I'm giving you a signal. Go and buy New Zealand card. Then you can show me what will happen next month on the 20th. Today is the 20th, ne? I'm giving you a signal of New Zealand card. Remind me on the 20th what is going to happen. So chances are high that New Zealand card is going to buy in a month from now. So based on the things that we know, the chart pattern that we learned, can you see that? Okay. That level, this is the third touch with a breakout right there. So we're going to hold. This is the first take profit, and we'll expect a retracement right there. We'll expect a retracement, and we should expect it to push up to there. That is our target. And this tool is telling us that if we are to go into this buy, just a moment, we have a call, okay? If we are to go into this buy, ne, with this risk to reward of 3, we will have a risk to reward of 3.5, and it's a 46 pip stop loss with a 164. It should be P2P. We have an order, I see. P2P. With 164 pips on take profit. So that is the first tool I wanted to introduce you to. Is it clear on that tool before we move to another tool? Unfortunately, this tool is not available on MT5. It's only on TradingView. So it's a very simple website. You just need to put in the time to master it. And
Hi, evening.
Good evening. How are you?
Fine, yourself.
Very well.
So you're trying to say with when it comes to pairs, you have to hold it for a month.
That's correct. What I'm trying to say is this, ne? Not always, but let me just try to make you understand what we are talking about holding, ne? I want to look for you something I can use to explain. I think we can even find it here. I don't know why my network is a bit slow. Let's just be patient. It's taking some time to load. Okay. What you want to do as a trader, Dinashe, ne? You want to know, based on your strategy, how long does it take for it to reach your target? Ne? For example, if we are to use this as a strategy, the chart patterns, ne? Based on our chart pattern strategies, this level could be a selling zone. Do you agree? Based on the pattern, Dinashe, can you see that? That this was a pattern. Dinashe, are you there?
Yeah, I'm here.
Okay. Based on our pattern rule, ne? We were supposed to sell here, ne? And then wait for the price to come until at the bottom here. If not here, this is our first take profit target. We are supposed to come take our profit here, ne? But I want you to understand, when was the price here and when was it here? This gives us an idea on how long we can wait for us to achieve our result. You can do that by pulling your crosshair. This tool, it's also available on MT5. Ne? This tool shows you the date, and let's say here, if we had to put it there, we could have taken our entry right there. Ne? Let me use we could have taken our entry here, See the reason we are pulling our stop loss to give us space. If we are to sell here, the price could be in profit for some days, then go back again. If we are to put our stop loss very close here, the market was going to take us out, and then from there it melts down maybe until it reached our first target. But how long did that take? Okay, that is what we want to understand. So usually, if you bring your crosshair here, and then you bring it again here, it can tell you on which day or date the price was here, and when was the price here at this level, or maybe even here. Ne? For you to have an idea, if maybe the price took a week to travel from here or 2 weeks to travel from here to here. So it will tell you next time when you're gonna sell, the expectation or the duration that you can possibly hold that trade. Dinasha, is it making sense? History can give you a projection on how long you can possibly hold based on your strategy. Okay? And then I understand you are probably asking because there are things that goes on in the group and on social media. People entering within 5 minutes, they are making money and so on. There's a different approach to that. I won't advise because most of those people, they are losing money. Don't be fooled by screenshots and the other things that, and then the social media lifestyle that we are being shown. So the reality of Forex is what I'm trying to teach you now. So there is a different approach that you can take. If it's technical analysis, for example, if you are to sell here, let's check on the crosshair. If we bring the crosshair, let's check at the bottom. We are going to see a date. Ne? The market was there on 28th of February. You see? If you are to sell on 28th February, the market reached the target here on the 7th of March. You can project about 7 days before you have reached the target. Meaning, now that we are selling here, as we speak, ne, we have sold here. We sold yesterday. How long are we expecting this market to reach our target? We should expect the market to reach our target maybe in 7 days or more. That is what history is telling us. And then, if you are to trade news, for example, like the news that I was showing you, you can just wait for 8 o'clock. You go on your, if you are a technical trader, yes, you can expect to hold even up to a month or more. Ne? If you are a news trader, you will save a lot of time if you are good at trading news. Because what you do, you only go on the calendar, like now, ne? You could see that, okay, at 8 o'clock, there will be some speech, and 8 o'clock at 8:30. What you do is you just sit on the computer, you open your calendar, you open your video, the live speech that they are giving, you sit and interpret, you enter, ne? You enter the market, then as the market is moving, you can decide, since it's not going to last, this speech maybe just for an hour or 2 hours, ne? You just enter the market from the beginning of the speech or from the beginning of the news event. You enter a few minutes ago, you leave. At our office, one of our colleagues, he left here celebrating this evening. Ne? He usually knocks off at 5, but he didn't leave the office until maybe 10 minutes past 8. Ne? Little did we know, he was waiting to trade the news because we do a lot of trading throughout the day. So little did we know he was waiting to trade the news. Then 10 minutes past 8, he just took his bag, he left, and then he was like, no, it's fine. I made enough. So he was happy. So little what he did, he only traded for 10 minutes. But what he did, he just waited for the news. He bought Euro USD 10 minutes later. You see how it moved in 10 minutes. I was showing you how Euro USD moved. He closed and he left within 10 minutes. You decide yourself, Dinasha, to answer you. How long to hold depends on your strategy. If you are a trader on technical and bigger time frame, expect to be holding for long. If you are a news trader, you can just hold maybe for 10 to 15 minutes. Just depends on your strategy. I hope I've answered your question.
Yes, you have. Your screen is not moving. or is it just mine?
Yeah, it's not moving at all. It's just a video, then I post it.
Oh, okay.
Okay. And then the next tool that I want to show you, let's get back to any of the charts. Ne? It's the Fibonacci retracement tool. This is how the Fibonacci tool was developed. I want to take a few minutes on this because it's quite popular, and you are going to need it to you. Well, what's happening with them? It's something that Zoom is telling me that sharing your screen will close the whiteboard to everyone. I want the whiteboard. Workspace. Seems Zoom upgraded their whiteboard. Okay, let's try to use it as it is. Okay, we see we have some upgrades compared to how we are now. It's confusing me now. Okay, let's go back and use Trading View to do our explanations. Ne? On Trading View, you can simply shift this. You drag it a bit, then you can push it up to give you a white screen for drawing. Ne? If you remember the Fibonacci sequence, ne? From high school, ne? If we are to Google here, Fibonacci sequence. This is where the tool came from. Let's simply go on images. Okay, let's take this one. I'm afraid to zoom it because it will open funny pages again. Here, let's take this sequence. The first digit that we have in the sequence is a 2. Then we have a 3, then we have a 5, then an 8, and then a 13, then a 20. A 21. So I told you yesterday that these tools, there are mathematical formulas behind. Ne? For example, if we take that sequence, we write down those numbers 2, 3, 5, 8, 13, 21, 30, 34, 55, and 89. So this mathematician, he decided like, if you take this number, I hope you know what are this sequence, adding the previous two numbers to get the next number, obviously, okay? If you take the number in front and you divide it, no, you take the number that is behind and divide it by the number that is in front. If you take a 2, ne, just take your calculator and follow me. Take a 2 and divide it by 3, you get a 0.66, ne? 0.666 something, ne? And then you take the next number, that is a 3, you divide it by 5, you get a 0.6. The point is, you will always get numbers that are close to each other in decimal places. You take a 5, you divide it by the number that is in front, which is an 8, you get a 0.625, which you can round to 0.61. Ne? Then you take a 5, divide it by 8. The same, you take an 8, you divide it by the number that is in front. You are going to get a 0.6153 something. And then you take an, are we following? Or I should write everything that I'm doing.
We are following.
We are following.
Okay, then you take an 8.
We are following.
Okay, you take an 8, you divide it by 13. You divide by 13, you get a 0.6153 something. The key point is 0.61. Most of the time, or 90% of the time, you are going to get, or maybe 99% as you go bigger, the answer will always be a 0.61 something something. Even if you take, let's say, the big number that we have in the line, let's say 55 divided by 89, ne? You get a 0.61 something. If you continue doing this in the sequence, you are going to get the 0.61 as the key number in this sequence. And then this guy is a mathematician. You know how mathematicians are. He like this number, it mostly appears in nature, or this sequence usually appears in nature, like we can see here. I don't know how to call this the Cleveland design that they are showing, that this design, it follows the Fibonacci sequence, even on how this what's this you know, this, I don't know the correct language, you know, English is not really, so you know how these things, these small things that we find in the river, on how they grow, apparently they form a pattern of a Fibonacci sequence, ne? And then if we see here, these guys, apparently they follow the Fibonacci sequence pattern. If you go deeper into the Fibonacci sequence, you realize that even on some flowers, for the girls that love flowers, apparently there are some flowers that grows following the Fibonacci sequence. And apparently even the way the rainbow, on how it forms, it follows the rainbow colors. They follow the Fibonacci sequence. So there are a lot of random things that are appearing in nature that follows this mathematical Fibonacci sequence. So this guy was a mathematician, he was also a trader. He tried to understand that if everything, most of the things in nature, or some of the things that are following the Fibonacci sequence, there should be a relationship with the market on how the market moves. So chances are that the market can also follow the Fibonacci sequence, and he went ahead to prove it, which is very true. I'll show you some proof that the market also, at some point, it follows the Fibonacci sequence. So this tool is available on your MT5 platform, ne? It's here. Zoom share. I don't know what you're seeing there. I want you to see my MT5 platform, ne? Should be the one that you're seeing now. It's available on the MT5 platform, this one, ne? You just click on it, then you apply it on the, you usually apply it on a trending market this way. Let me just, I want to draw to demonstrate to you on how to apply the tool. On an uptrend, ne? The market will move up, then down, then up, then down, then up, then down. You as a trader, our goal, okay, our goal as traders is we want to pinpoint these levels. We want to pinpoint this level so that we can be buying at this level as we jump or we join the trend. Remember, the trend is your friend. When the market is trending up, you want to look for a level where you can buy, ne? And these levels, these are the right level to buy, and you can use the Fibonacci tool to get this point on your behalf, to predict where the market will turn around. So how do you use this tool? So how to use it is this way, ne? First, you should identify a series of higher highs and higher lows. You should identify that the market is making new highs and it's making these retracements. Then you'll be like, aha, okay, so this is what the market is doing. I will wait for this market to come back here, and then I will buy here. I will hold until it reaches there. Then I'll take my profit. So from there onwards, I'll wait for this market to come back up to here again. I'll buy here. Then I'll go hold to it. Then I'll take my profit here. These points, how do you identify them? The Fibonacci tool can help you identify it. This is how we are going to use it, ne? You are going to first identify that the market is behaving in this manner, and then you are going to place it in an uptrend. you are going to click on the tool, you can place it at the bottom of the previous high. Let's assume by this time the price is dancing around here. Ne? You click on the previous bottom, you drag up to the previous high. Ne? It will automatically draw these numbers for you. And remember the number that we're getting there, it's a 0.61. This on the tool, it's going to show this number, 0.618. Ne? Where we are going to see that number is where we are going to buy the market. I'll show you on how that tool is going to work. The same in a downtrend. Ne? In a downtrend, what you are going to do is this. Ne? You first have to identify, let me push this price up again. I want to push it up the chart. Ne? You will identify a series of higher highs and higher lows ne, on the market. Okay, you will identify a series of lower lows and higher lows this way. Then you'll be like, okay, so this is what the market is doing. Let me wait for it to push back. So what you are going to do is you are going to place that tool at the previous high and the previous low. So numbers will be automatically drawn by the tool to pinpoint the turning point. And most of the time, the most important point is the 50% and the 61.8%. So now let's get back to the tool. My network, is my network fine? Healthy is complaining. Are we okay? Yeah, maybe it's
We are okay.
Okay, we are okay, ne? That's if we are okay. Now, what the next thing that we want to do is we want to identify right here as we speak. We want to identify a series of a nice series of higher highs and higher lows. Then we can try to apply this tool that we are talking about here. My chart is responding a bit slow. Ne? Let's see if we can find something here on the H4, or we find something. Yeah, there I see it, but it's not so clear. I want to look for the clear higher highs and higher lows that we can clearly see. So we can pull this tool and try to predict the next move on the market using the tool. All these markets, they are just behaving in a funny way. Okay, that's fine. Let's take this as an example. We switch to the 2-hour time frame to see. Okay, this is how we are going to use the tool. Ne? What we can identify here is this. The market started from the bottom. Let's just start there. It goes up. That is the lowest it reached. It went up. And then this is the lowest it reached. Ne? And then it goes up again. Ne? We can see that pattern. Ne? Now, let's assume if you were at this level where you identify that the market is doing, let's remove that. The market is doing these higher highs and higher lows. At this point, you could wait to buy somewhere here. What you are going to do is you could pull this tool. Let's just click on it. Then you drag from the bottom of the market, you drag all the way up to the top of the market. Can you see? So let's just clean up the chart to clearly draw from the bottom to the top. And then your buying zone, can you see that when you do that, this tool is it's putting numbers here. This is 100%, this is a 61%, 50% retracement, and a 0%. And in most cases, the market retraces at the 61.8. It's coming from the 0.61 that we're calculating. Ne? And then if we are to do that, let's clean up the chart. If we are to do that, what we could have done is we could wait for the market to come up to the 61.8. When it gives us a green candle in that zone, then we could buy. So we could buy in this area, then we go. So the same what is happening here. The market goes down, up. The market goes down again, then up. So, but here it's being disturbed by the news. The news spiked. But what we're going to do, if you're looking for a buy, so no, a sell, this sell move is already complete. Can you see? It already sold from the news event. So, but what you are going to do is you could use the fib tool. This one we can't. I want us to find something that we can apply now as we speak. Sometimes when you teach or when you are shown things based on history, it doesn't really make sense. Let's see if we can find, yeah, for example, can we use it? This one went too far. We want a nice one with higher highs and higher low. But hope you get, yeah, even here. Ne? Okay, what we see here, ne? The market is making higher highs, but they are not clean ones. Most of the time, you'll find clean higher highs on H4 and on D1. It's fine. Let's just use it here for the sake of time. We're gonna have enough time to practice this tool. Okay, what we can identify is this is a high, that is a low. From there onwards, it didn't make any new high. It just made some funny lows. This can be a low. Struggling to pinpoint the higher highs and the higher lows. Okay, that is a high. This is a low. Let's say if that can be a high, then you're expecting the market to go back before it will continue. It's an uptrend. This is what we know. So what you can do now is you bring the tool starting from here, you drag it all the way to the top, and then we see where is the 61.8. That is the level where we are going to buy. So you bring the tool in an uptrend, you drag from the bottom, you drag all the way to the top. Can you see where is the 61.8? If the market is to retrace, what our expectation in this moment is, we want the market to come up to the 61.8 zone. Can you see that? This, when we get a green candle in this area, then we buy, expecting the market to continue going up. Hope it's clear on how we are applying the tool. In a downtrend, the opposite also holds. So in a downtrend, you do the same. When the market is trending down, let's try to see if we can find a downtrend. When the market is trending down, you pull it the opposite way, from the top to the bottom, to pinpoint, our time is really gone, to pinpoint those areas. And then what's the other tool I wanted to show you yesterday? Let me check on the chart. People are leaving the meeting, it's getting late. Okay, those are the tools that I wanted to show you. Oh, the other tool that I wanted to show you is the rectangle. Ne? This one is used to mark a resistance or a support, because you can drag it around and play around. You can use it to mark a major resistance or a major support zone. You can use it to mark that area for some reason, whatever that you are doing, using it for analysis. What's the other tool? Most of the tools I have shown you how to use them. Okay, let me check on TradingView if there's an important tool that I forgot that you need to know. This one is just for analysis. Let me just show you the last one. This one, the path, it's just used to draw. You just click, you click up to the top, then you come back, you click. If you are making your prediction of the path on how the market will move, that is the tool. When you are done, you just double click to release it. That is the other tool I wanted to show you. Yeah, but apart from that, those are just the major tools. And then this one is just the opposite of the short position. I showed you this. For a short position, you do that, the red goes on top. For a long position, you use this, the red goes at the bottom. And then your task is just to adjust them now based on your take profit and your stop loss. Ne? That is the tool. Okay, that is what I prepared for you for tonight from how do we spot order blocks? Let's start with this tomorrow if possible. I will show you what is an order block. Okay, from tomorrow, we're gonna dive maybe 2-3 days on fundamental analysis. And we also, it will be best, the problem is the time that we are trading. That's why I took the time to show you at 8 o'clock, because it was lucky enough that the time that you came on Zoom, it's the same time that the news is happening. Let's see how far did the US dollar go during this event. How far did the US dollar go as an effect of fundamentals? Can you see that whole candle? It was just because of news. We had to do that. Can you see this whole impact? That whole move was because of news. Okay, we'll go properly with news tomorrow. The point I'm trying to make is the time that the news happens is not the time that we have our lessons. So it will be, we will be having theory. Sometimes practical makes more sense than theory. Like now, there's another news that is coming up at 11:45 on New Zealand on GDP, the gross domestic product. Ne? And then tomorrow at 2 a.m., this is one of the most profitable news events. Trust me, we can bet on this. The news that is released at 2 a.m. on Australian dollar is one of the most profitable news events that you will ever trade. So what you have to do now is you have to stay awake 2:30 a.m. You are up on your laptop trading, so to say. These are the challenges that we're gonna face on how I'm gonna teach you news that is passing at 2:30 as an example. Unless we do theory, what we're gonna do is we're gonna go through some news events, theoretical. Since the time it's not gonna accommodate all of us, it's up to you now to go and implement it practical, you see. So those that we're gonna catch at 8, we will, but news will be quite tough. Maybe we'll be looking at results and so. And even this one, the one for tomorrow on French, on Euro, French flash manufacturing PMI, very profitable news. This one on chef, no, not really. We don't have any other news that will be trading. Yeah, but for tomorrow we will have onwards. We'll take time now to go through how to trade this kind of news event, how to come up with a news trading strategy. If you want a strategy to trade news, make sure not to miss the lessons from tomorrow onwards. I will teach the strategy on how to trade news events. So that is what we had for tonight from my side. I'm done unless you have questions or comments. Yes.
Seeing that tomorrow is a public holiday and there is that event at 10:15, can we not have a class at that hour?
I even forgot that tomorrow is a public holiday. Okay, tomorrow is a public holiday in our country, but Forex does not recognize it, unfortunately. There are only 2 public holidays that the Forex market recognizes. And those are the only 2 public holidays that the market closes. It's Christmas and which one? You can guess. Ne? Christmas and?
New Year.
Definitely. On Christmas, you cannot trade. On New Year, you cannot trade. Apart from that, all other holidays, they don't matter in the Forex market. It will be a holiday, but we will be trading. It's even good that...
No, that's not what I meant. What I meant
I get it. I'm just trying to share information. Yeah.
Oh, okay.
Okay, what you meant is... okay, tell me, what will we do? What did you mean again?
I meant to ask, instead of having an 8:30 p.m. class tomorrow, can we have a 10 o'clock class so that we trade, we see it live? So that when you show us that 10:15, you are showing us live as how to trade news.
Okay, it's a good practice. Can we have it a bit earlier than that? Because I'll need more time to give the theory part before we get into the practical part. Since
Yeah,
the news
okay.
will be released at 10:15, ne? Can we start at 9:30 in the morning?
Yeah, should be good.
So what we'll have is 9:30. We'll take the first 45 minutes. Maybe the first 15, I introduce the news, how to trade it, the approach, the strategy. Let's say 45 minutes to prepare for the news. Then when it comes out at 10:15, we know what to do when the news will come out. So what we can do is we can have our demo accounts that we are going to trade the news tomorrow live.
Yeah.
Is that okay?
Yes, it's okay.
Right. So
Yes.
meaning tomorrow we do not have an evening lesson. We would rather have it in the morning. Is that correct?
Yeah. Yeah.
Approved.
All right, good. All right, then we'll see you tomorrow at 9:30. We prepare for the news. Chances are high that this news will move the market that involves the euro, since it's based on the euro, that involves the euro, just like we saw it moving with the US dollar at 8:30. So any other comments or questions before we can call it a night?
If we had a real account, how much would we do put on the account?
My recommendation on a real account is 100. Ne? It's 100 USD, and that is what we can put on. I'm just afraid that I can invite those that are done with lessons because they understand money management and risk management. Ne? Those things. I'm afraid I don't want to rush you guys to real unless you have already basics, because you will struggle with how much to risk, what lot size to use. Those are things that we still need to cover separately. So, but if you had a real account, I would advise at least 100 or more to trade. Yeah. Speaking of a real account, this is just for motivation. If you have a question, please come through. Questions? Comments?
Comment, the class was excellent.
All right, thank you so much. Okay, this is just motivation. Let me mute you all. On how Forex is paid. Forex it pays those that are very committed to it. That is the funny part, and they have proper knowledge. If you look here, this afternoon, we were processing a withdrawal for someone of a 3K USD. This person was struggling to withdraw. He's a good friend of mine. We have been being in touch. We never met, but we have I had several calls. You wanted to withdraw a 3K, we could not process your withdrawal request. Unfortunately, it's a 2K. And then on the other screenshot, it's a 1K. So it's a total of 3K. And then he gave me a call. I was like, oh, no, that one, you don't have to stress. And then we assisted him to process the withdrawal, and it was approved within like 2 hours. That is a 1K. And then that is a 2K withdrawal. So what we do is we take your USD, like we always explain, and then we take your USD, then we sort you out with pay to sell. So, and then we sorted him out with pay to sell. So see how much he received. That should be a motivation on its own for us to take this Forex thing serious. It's a 53,610. 40 Namibian dollar. This was excluding the charges. It was supposed to be around 56 if you was to withdraw on his own. You get it? We charged about, it's a big amount. It's a 2 point something that we charged because FNB will charge us and we also want to make profits from the transactions and all that. We don't charge. Yeah, but you get the point. That is a motivation on its own. It's a parcel, ne? You can go and buy a parcel with that. So it's a motivation on its own for us to take the whole Forex thing serious. Okay. Otherwise, we can have a good night ahead. We meet tomorrow. Bye.
Bye-bye. It was a nice class. I really enjoyed it.
Bye.
Sorry, sir, I have
Bye-bye.
sent you a message directly on the Zoom. Are you
Pardon?
able to? I've sent you, Helby have sent you a direct message on Zoom.
Yeah, I